And moving on to Nigeria, we did see the market tick up slightly to moderate the losses we saw last week. The market was down 1% last week, but on Friday we saw it move up by 0.25%, closing at 32,849 points for the all-share index. It was moved higher, as we'll expect these days by conglomerate companies. Joining me in the studio to give me his thoughts on where the market is going. It's big earnings season in March. With the banks, to give me some perspective on what to expect in the market this week is Muktar Mohammed, an analyst with Assar Investments. Thank you so much, Muktar, for joining us.
Welcome.
And like I said, this month is all going to be about earnings, particularly with the banks. We may see the likes of Zenith Bank and Guarantee Trust Bank kick things off this week. Your thoughts about what we're likely to see. Given the way the banks have traded over the last week, we've seen those gains moderate significantly. Even volumes have moderated as well. So your thoughts on where the banks are headed?
I think the banks just have to surprise us for them to move forward.
Everything is priced in.
Everything is already priced in. I just think they should be, unless it comes to one or two surprises. And nobody knows who will surprise. But as it is now, when you talk of Zenith Bank, you talk of GT Bank, and maybe even Program First Bank, you know that their earnings are always almost just slightly different from each other.
Yeah.
So unless any of the three do something exceptional that investors are not expecting, then we could see the upside.
But have you factored in liquidity? I mean, just like the guys I was speaking to just now mentioned, the farmer said it's a liquidity story. That's why we're seeing valuations of the consumer names stretched. Don't you think there's a potential for us to see that in the banking sector as well?
We could see that because of the market makers, which have indeed makes a little bit of liquidity available in the market recently. And so we might see that. But even the market makers too, if you watch the type of trading they are doing, if you are in this stage, you realize they are trading with caution too. They are really watching and waiting for if the result is good, then if it surpasses their expectation, then liquidity will help him buffing the price up. Then if it doesn't surpass the liquidity will still help him bringing the price down. So it might go which way or that way. It all depends.
Well, we'll see how it plays out. But what about the cement companies, likes of Lafarge, WAPCO, Ashaka Cement? CCNN has done very well this year. It's up over 100%.
Yeah.
Your thoughts on what's likely to happen when we begin to see those numbers?
I think for Lafarge, WAPCO, and Dangote Cement, they really need to up their earnings and up what investors will get from them at the price they are selling at now. And then for CCNN, we expect that if they could give above what the early, remember CCNN last year, they didn't give anything. So we expect
in terms of dividends, right?
In terms of dividend payout. So we're expecting that they will do something. So that might push up their price a little. But for Lafarge, WAPCO, and Dangote Cement, we really need to. They really need to do something special. For me personally, I think based on their earnings, based on their dividend payout, they're a little bit overpriced.
You mentioned dividend. I think that's an interesting theme in this season, especially for the banks. Typically, what we see is that a lot of people react to whatever the banks pay in terms of dividends or bonus shares when they release their full year results. Now, what we're hearing now is that banks probably have a little more incentive to keep back dividends, given the new rules with respect to capital adequacy. So your thoughts on what is likely to happen if the banks don't pay as well as they used to pay? I think historically they paid closer to 50%. If they were to bring that down to about 30%, how do you think the market is likely to react?
The market will react negatively. Let me give an instance. If you watch First Bank, 2 years ago, they gave 60 kobo. You saw how the market responded to it.
Then but we're in a different environment now. That's what people will say. Liquidity is all over the place.
Liquidity wants to gain more liquidity. I want to have more liquidity. And so the good dividend payout adds to my liquidity base. Right. So, and to be able, you should realize that the institutional investors, the major investors, don't eat their dividend. They reinvest it into the market. So the better the dividend payout, the more liquidity you are bringing into the market indirectly.
Right.
So looking at that, if any bank is going to pay below what they paid last year because of the CBN policy, I don't see that stock move. I rather see that stock coming down than maybe going up. Give an instance. Let's look at something that happened to UBA.
Right.
That one brought UBA as low as 1 naira 60 something cover because the dividend payout was low. And so same thing happened during Diamond Bank and Fidelity Bank. You know, Diamond Bank was not planning to pay dividend. When price of the stock started nosediving, they had to pay a dividend of 5 kobo, and that did not help their price. It went as low as 2 naira. Right. Nigerian market is driven by dividend payout and bonuses. And most investors are not ready for the bonus. They know that the bonus will be scarce to come by, so they depend on the dividend payout.